Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkai.
A central banking strategy known as inflation targeting involves modifying the monetary policy to attain a specific yearly inflation rate. The idea behind it is that maintaining price stability by reducing inflation is the greatest way to promote long-term economic growth. Governments work to combat inflation by implementing prudent and long-lasting fiscal and monetary policies. Many carry out their monetary policy by relying on intermediate aims like monetary aggregates or exchange rates due to convenience and experience. 7 small and medium-sized advanced economies have departed from this custom of utilizing such intermediate targets and start to emphasize the inflation rate over the previous 10 years. Central banks have adopted inflation targeting from developed, emerging market and developing nations on every continent. Fully fledged inflation targets are nations with institutional procedures to ensure that the central bank is accountable for attaining the target and making an express commitment to meeting a specific inflation rate or range within a particular time frame. According to the International Monetary Fund, Finland, Sweden, Australia, Canada, New Zealand and Spain have all embraced inflation targeting in the last 10 years. This innovation was inspired in most of these nations by unsatisfactory experience with maintaining a fixed exchange rate or setting intermediate monetary targets. The targets were initially developed by the governments of New Zealand and Canada to aid with deflation. The success of these 2 nations in containing relatively high inflation encouraged the other 5 nations where inflation rates were already reasonably low to adopt similar measures. The ability of central banks to respond to shocks to the domestic economy and concentrate on home issues is provided by inflation targeting. Investor uncertainty is reduced by stable inflation, enabling investors to anticipate changes in interest rates and grounds inflation expectations. Inflation targeting also promotes more openness in monetary policy if the aim is made public. Additionally, central banks in more developed economies have adopted many key components of inflation targeting, such as the European Central Bank and the US Federal Reserve, even if they do not use the term officially. These central banks are dedicated to achieving low inflation. Still, some do not announce specific numerical targets, although there are expectations such as the United States, which explicitly adopted an inflation target of 2% in 2012, or have other goals. They've promoted maximum employment and moderate long-term interest rates, as reported by IMF, in addition to stable prices. Over the last 20 years, many nations have effectively implemented inflation targeting, and many more are headed in this direction. Inflation targeting has evolved into a flexible framework that has proven durable in various situations, including the most recent financial crisis. So what do you think about inflation targeting? You can leave a comment below, you can like this video, you can also subscribe to our channel, and you can press the bell icon for our future videos. I'm Rachel for Kalkai Media.